Mostly rose as China cut its key lending rates. Hong Kong's Hang Seng Index led gains, jumping 3.4% as tech and property stocks rose. Mainland China markets closed marginally in negative territory. Japan's Nikkei also jumped, climbing 1.1%. European stocks were uncertain as investors appeared to brush off concerns about rampant inflation. US stock futures were slightly higher after another choppy trading session as investors remained cautious amid rising rates, and the Nasdaq dipped into correction territory. To talk to us about all of this is affecting our local markets, we are joined by Jones Gondo, who is from Nedbank CIB. Jones, thanks so much for your time. I mean, what do you make of our local markets? And perhaps let's touch on some of the key company news that came out. I saw a trading update from Woolworths as well as Distel.
Yeah, thank you for having me. I think our local market, those two counters you just named, Distel and Woolworths, I think actually for Woolworths they had a beat in terms of their earnings trading update. And Distel actually showed really good recovery from what were months of lockdowns and disruptions due to, I suppose, inability to trade via restaurants and bottle stores and restrictions. And so I think those are quite positive results. And I think from the last time we chatted, it's also a view that the November, December and Black Friday and the month really helped with trading, particularly in food and beverages.
Just to add in here on Woolworths, I mean, looking at analyst observations of that trading update, they are noticing that the food business is starting to slow. Should we wait for the likes of ShopRite to release their results just so that we can get a better comparison in terms of how bad the food business actually performed for Woolworths?
Yeah, I think we do need to wait to see how ShopRite Checkers traded. I think it's really a story of market share decline in the case of Woolworths. But if we do see fairly strong results out of ShopRite, for instance, just as a comparison, we'll really get to see the clearer picture on volume during that period.
Let's take things stateside. We're still looking at U.S. earnings. What stood out for you when you look at the banks that kicked us off since Friday?
Yeah, it's been a mixed bag, to be honest. We saw, I think, one of the common trends across the banks as they've reported results has been the expectations they have of high inflation, how that's feeding into their own sort of prints for wages and non-interest expenses. So on the cost side, it's been quite disappointing across some of the banks. But I think one of the big sort of supporters of earnings in the past was trading securities revenues. And that was fairly mixed across the banks. I think it was fairly patchy with regards to one-off transactions, and so I think we did see some of their shares come off based on the results. They were quite disappointing for the street in the US.
For a couple of months or so, we've been talking about the prospect of rising rates and the various indications that we will start to see rates rise from March. What does that do to the valuation numbers that we've seen, especially for some of those U.S. companies?
Well, for the banks, it's certainly positive because they get a positive endowment effect on their loan portfolios as they reprice up. But I think it's a double-edged sword to some extent because we need to see how the US Fed responds. If they respond gradually, that can be absorbed into their customer base as banks. But if it is quite aggressive and causes some panic, then certainly that adjustment will be too aggressive, and we'll see the sell-off not just in banks but also in equities, because essentially we're discounting at a higher rate cash flows into risk assets.
Right. So looking at the Asian markets, I mean, I think the dominant theme there is what is happening in terms of what the PBOC has done and also the announcement regarding those LPR rates. When you look at China and the risks and opportunities, how are you viewing China? I mean, does the prospect, or rather the idea that the PBOC is wanting to do more to alleviate some of the pressures, especially from the property side, make things a little bit easier? Does it alleviate the risks for you? How are you looking at it?
I think it's more that the real front end, the 1 year LPR, is where they really did the 10 basis points. If you look further out at the 5 year, it was only 5 basis points, and that's really the 5 years what is used for the mortgage market as a sort of pricing benchmark. So if you want to look at it in a slightly different way, there is accommodation, but it's skewed towards, I guess, businesses and corporates, and really to support that front end of the curve. And that should be good to try and support growth and productivity going forward, as growth has been on a sort of slowing trend.
In an environment like this, what sectors do you like?
Well, I think for South Africa's market, really, it's we are in a rate rising cycle, and inflation is coming through. So I think from the recovery banks have been making domestically, I think they still in view and should also positively benefit from a positive endowment effect. But I think also, given inflation, it should be a weakening bias for the currency. So I think rand hedge stocks should continue to give a positive bias in a lot of portfolios. And I think consumer cyclicals should, I would say, be particularly those that are rand hedge people might be looking to take some profit off on those counters, given the run they've had already.
Jones, thank you so much for your time. That is Jones Gondo, who's a senior research analyst at Nedbank CIB. We're going to take a quick break. We'll have more business news with Nompumelelo after the break.
Every day is a sports day.
We keep you